Welcome to the Knakal News Network. The Knakal News Network is brought to you by the Knakal Group, Cushman & Wakefield's #1 investment sales team.
Hi, I'm John Hageman, Executive Managing Director at Cushman & Wakefield. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of New York Investment Sales for Cushman & Wakefield. The third quarter numbers are in. Let's talk about what we're seeing in the market.
Well, one thing that I find encouraging about the market is that while dollar volume continues to decrease, and the amount of that decrease is actually increasing quarter over quarter, the number of properties sold is doing relatively well. We are down from last year, but each quarter seems to get a little bit more active, so that's a positive thing.
Bob, I know you like to talk in numbers instead of adjectives, so tell us what these numbers really are.
First 3 quarters of the year, Hags, we're on pace for about $59 billion of total dollar volume this year. That would be down about 23% from the all-time record of $77.1 billion that we had last year. I mean, last year was incredible. The 23% reduction seems significant. That still would be the third best year that we've ever had. You know, we had $62.2 billion in 2007, which was the prior record before last year. But this number of $59 billion is a great number in and of itself.
So that's dollar volume. Let's talk about the actual number of properties sold.
The number of properties sold is on pace for about 4,600 this year. That would be down about 11% from the 5,191 that we had last year. That pace I'm actually very encouraged by. We came into the year anticipating a 30 to 40% reduction in the number of properties sold. And that's one of the reasons why I'm a little bit more optimistic about where the market is headed, because I believe, as you know, we've talked about this so many times, that the number of properties sold is actually more indicative of market activity than dollar volume.
Bob, we talked about dollar volume and number of properties sold. What about property value?
Values are increasing, and that is something that we've seen quarter over quarter. I think that the rate of increase in pricing is decreasing quarter over quarter. So now if we look at the entire market, we're probably up about 12% from where we were at the end of the first half of the year. And there are a couple of transactions that skew those numbers very significantly. We've had 2 retail condo sales down on Spring Street in Soho at over $17,000 per square foot. And while those are only 2 transactions, those numbers were so big that they really are very impactful on the overall average.
So Bob, over the last 2 to 3 years, you've spoken a lot about where the market is, and are we in a market that's more similar to 1988 or 1998? Now that the third quarter numbers are in, and we've almost 75% of the way through the year, where do you think we are?
That's a great question, Hags, and I think that we looked at 88 and 98 because those are both years in which we had cyclical peaks in the number of properties sold. 2014 was very clearly a cyclical peak. We knew after 14 that 15 was not going to be as robust. And in looking at it from after 1988, the market really had a very significant correction. Values dropped, volumes dropped. And after 98, the market just continued to run and took off. I think what we're seeing now is actually a scenario that is very reminiscent of what happened during the recession of 2000, where we had the dot-com bubble burst, the economy went into recession, the volume of sales, both the dollar volume and the number of properties sold, did decline, but values were not impacted. Values actually increased in 2000 over 1999. They increased in 2001 over 2000. So we had a volume disruption, but we didn't have a value disruption. And I'm almost feeling like we might be in that type of environment now. In summary, the investment sales market in New York City through the first 3 quarters of 2016 is performing as expected. The dollar volume of sales is on pace for about $59 billion, which would be 23% below last year's total. The number of properties sold is expected to finish the year at about 4,600, 11% below last year's total, but significantly higher than we originally anticipated. Property values, on the other hand, are continuing to perform well and are continuing to increase, although they do appear to be plateauing. overall, we are more optimistic about the future of the investment sales market than we have been in a couple of years.
Thank you for joining us today. Tune in next week for another episode of the Knakal News Network.